Hello everyone, welcome to this last topic of module 5. Today we are going to see how GSTR 3B is reconciled and validated with GSTR 1 and books of accounts. So today we are going to learn about the importance of matching GSTR 3B with GSTR 1, that is outward supplies return and books of accounts. So the objective to learn about validating GSTR 3B and GSTR 1 is to avoid the mismatches, the penalties and the notices issued by the department. So before we proceed with today's session, let us quickly see what we did in our previous session. So in our previous session, we learned about filing of nil GSTR 3B return. We learned what is nil GSTR 3B return and who can file it. What are the consequences of non-filing of GSTR 3B nil return, and we also had an overview of different scenarios where GST 3B return cannot be filed as nil. So let us proceed with today's session now. Why reconciliation matters? Reconciliation is important to avoid discrepancies and error. It ensures correct tax reporting. It prevents notices under GST law and supports annual return preparation. So reconciliation helps detect errors in outward supply reporting. Then it ensures correct input tax credit claims, also avoids mismatches between GSTR 1 and 3B, and reduces the chances of GST notices, demands and GST audit by the GST department. So mismatches between GSTR 3B and 1 can attract notices under section 73 and section 74 of the CGST Act. Also, if our data are reconciled, that is our books and our GST returns are reconciled with each other, then it is very easy and convenient to file the annual return at the end of the financial year. So let us have an overview of returns and books. GSTR 1, GSTR 3B and books of accounts. Then types. GSTR 1 is invoice specific, that is we do report B2B invoices in GSTR 1 return. GSTR 3B is a summary return of outward supplies, and along with this it also entails input tax credits. Whereas our books of accounts maintains the complete transaction wise data. Then the focus of GSTR 1 return is on outward supplies and corresponding taxes. GST focuses on the outward supply taxes along with input tax credits, whereas our books focuses on the complete financial records. Then the filing type is monthly or quarterly in case of GSTR 1. Also in GSTR 3B it is monthly or quarterly, and the entries in the books of accounts are to be done on real-time basis. Then what are the key areas to reconcile? So all the data that are reported in the GST returns must be reconciled with the books of accounts. Say outward supplies, then input tax credit, then tax liability and corresponding payments, and the credit utilization. So all of these are reported in the GST returns as well as are recorded in the books of accounts. So outward supplies details are reported in GSTR 1 return and it gets auto populated in GSTR 3B return. Also in our books we report the sales data on a day-to-day basis and transaction to transaction basis. So all three set of data must reconcile with each other. Then input tax credit, we do report input tax credit in the GSTR 3B, and input tax credits are also recorded in the books of accounts against the purchases made from registered parties. So the input tax credit as reported in GSTR 3B must be reconciled with the books of accounts, that is the inputs that are appearing under the head duties and taxes in the books of accounts. Also the input tax credit as claimed in GSTR 3B must reconcile with the GSTR 2B. So two-stage reconciliation is necessary In this case also, one is GSTR 3B versus GSTR 2B and GSTR 3B versus the books of accounts. Then tax liability and payment. First of all, the tax liability as per the return and as per the books must be in sync with each other. Then the mode of payment that has been used to discharge the GST liabilities must match with the return, and the corresponding cash balance or the credit ledger balance should match with the books. Next, the credit utilization. So just we discussed this. The output liability is finally met through either cash or through ITC utilization. So the balance of input tax credit ledger must match in the books as per the ledger. So what reconciliations are required to be made in case of outward supply? That is GSTR 1 versus the books of accounts. So all the sales data must be reported in the GSTR 1 return, and hence the outward supplies as per GSTR 1 and as per the books of accounts should match with each other. Any discrepancies must form part of reconciliation. Then GSTR 1 and GSTR 3B. So GSTR 3B gets auto-populated from the data that has been reported in GSTR 1 return. So both the set of data must match with each other. If there are differences between the two, then one must look for missing invoices or wrong values inserted in the GSTR 3B return or GSTR 1 return. And finally, B2C exports and RCM misclassification may also be the reason for differences. Next is ITC reconciliation. So for reconciling the input tax credit, one must compare the GSTR 3B return versus the GSTR 2B return. So the input tax credit column, that is table 4 of GSTR 3B, gets auto-populated with the data as per GSTR 2B. GSTR 2B is the result of GSTR 1 of the supplier. So GSTR 3B data must match with GSTR 2B data. There can be differences of the input tax credit actually claimed against the input tax credits that are appearing in GSTR 2B due to many reasons like reversals or ineligible credits. Then GSTR 3B and books must also match in respect to input tax credits. The credits claimed during the reporting period should match with the credits as per the books of accounts. Also, the ledger balance of input tax credit ledger should match with the books of accounts. To reconcile this data, one must identify the mixed invoices or the blocked credits. Then if any ITC has been overclaimed, such must be adjusted in the subsequent period return, and reversals, if not done, then must be done in the subsequent period, and for the time being it must form part of the reconciliation statement. Next, tax liability and payment reconciliation. So the tax liability as declared in GSTR 3B return must match with the tax liability as per the books of accounts. It may so happen that single ledger of CGST, SGST and IGST are used for recording both inputs and outputs. In such a case, the net balance of duties and taxes ledger will be the tax payable or input tax credit if it is appearing in negative. So these balances must match with each other. So the entries related to taxes paid during the reporting period, either through cash or credits, must be taken into accounts, and thus the cash balance and the credit balance as per the GST portal must match with the books of accounts. Also, compare the total tax amount across the reporting period. If the total tax amount during the reporting period is different from the books of accounts, then it should be reconciled and any shortfall must be paid in the subsequent period, or any excess payment should be adjusted in the subsequent period. Let us take a sample data and understand the errors and the reconciliations. So in this example, as per books, the B2B sales is rupees 5 lakhs, the B2 sales is rupees 2 lakhs, export sales are rupees 1 lakh. Input tax credit as per books is rupees 75,000. Now as per GSTR 1 return, exports have not been reported, and in GSTR 3B return, input tax credit has been claimed at rupees 95,000. So in the instant case, there are certain errors appearing as per books and as per the returns. Export invoice amounting to rupees 1 lakh is missing in GSTR 1 return. Such missing invoice must be reported in the subsequent period return, or if the financial year has ended, it must be reported in the subsequent period of the next financial year, subject to maximum of November return or filing of annual return, whichever is earlier. Then we can see there is an overclaim of input tax credit amounting to rupees 20,000. Such excess amount that has been claimed must be reversed in the subsequent period. Such a reversal in the subsequent period will attract interest thereon. So what are the tools for reconciliation? Excel format comparison. So different Excel formats are available over internet. Also, self-explanatory Excel formats can be developed to prepare the reconciliation statements. Then JSON file can be downloaded from the GST portal and imported to offline utility, and it can further be used to reconcile the data with the books of accounts. Then third-party software like Tally, Zoho, GST Zen or other billing softwares can be used to reconcile the data. Then GSTR 2B auto reports are also available. Such reports should be downloaded from the portal and matched with the books to ascertain the differences, if any, and reconcile the data. Let us see the step-by-step process of reconciliation. So first we have to download GSTR 1, GSTR 3B and GSTR 2B return. GSTR 2B return can be downloaded in CSV format or in Excel format. Similarly, GSTR 3B and GSTR 1 return can be downloaded in PDF or Excel format, or it can be downloaded in JSON format, and subsequently it can be imported to the offline utility and Excel can be generated therefrom. Next, we have to export the different ledgers and registers from our books of accounts like sales register, purchase register, then ledgers of duties and taxes, that is CGST, SGST or IGST. Then we can start the reconciliation process by matching the sales data reported in GSTR 1 with the books first. Then we have to match the sales data as reported in GSTR 1 and as reported in GSTR 3B return. Also, the corresponding tax amount between GSTR 3B, GSTR 1 and the books of accounts must match with each other. Next, we need to match the GSTR 2B return with the books of accounts. That is, all the invoices that are appearing in the books are reflecting in GSTR 2B return. If there are some invoices which are not reflecting in GSTR 2B return, it should be communicated to the supplier so that he can include such invoices in his next GSTR 1 return. Also, if there are some additional invoices appearing in our GSTR 2B return which are not there in our books, then it must be confirmed whether such invoices belong to us or some other party have mistakenly included such invoices in our GSTR 2B return. Such invoices which do not pertain to our business forms a part of reconciliation. Then we have to highlight the mismatches and note the reason for such mismatches and rectify such mismatches in the subsequent period return. Then what are the common mistakes? GSTR 1 turnover and tax liability is greater than the GSTR 3B turnover and the corresponding tax amount. For this difference, the department will issue show cause notice for such differences. Then input tax credit in GSTR 3B is greater than GSTR 2B. That is, we have claimed additional input tax credit which are not appearing in our GSTR 2B return. Such input tax credit can be denied by the department and further interest can be charged by the department on such excess input availed by us. Then wrong invoice type, state or GSTIN reported in the GST returns and duplicate or invoice missing in the GSTR 1 returns. So what are the best practices? Reconcile monthly or quarterly. So the data of our books of accounts must be reconciled with the GST returns on a monthly basis so as to avoid any recurring mistakes and errors in our GST returns. Match ITC only from GSTR 2B. So GSTR 2B is the data which contains the input tax credit details. It must match with the books of accounts. Any excess inputs appearing in our books of accounts must be reconciled, and if there are certain invoices that are in addition to those which are appearing in GSTR 2B, must be confirmed if it pertains to us or some other suppliers have inadvertently reported in their GSTR 1 return. Then ensure books and GSTR 1 are aligned. The turnover of the taxpayer at any point of time must match with the books as reported in GSTR 1 return. Then maintain audit trail and working paper. So the taxpayer should always be ready to face any notices or communication from the GST department, and hence the documentation should be proper and reconciliation should always be available for presentation. So to summarize, cross-verify GSTR 1 and GSTR 3B data along with books of accounts. Then match tax liability and input tax credit. Then use technological tools and document everything. Prepare for scrutiny with reconciled data. So there are many reconciliation tools or third-party softwares available which facilitates the GST filing and GST reconciliations. Such software can be used to handle bulk data. So proceeding further, so to summarize, cross-verify GSTR 1, GSTR 3B and books. So all three data should be in sync with each other. There should not be any discrepancies or differences, or if there exists any differences, a proper reconciliation should always be there to justify such differences. Then match tax liability and input tax credit. The tax liability as reported in GSTR 3B return and GSTR 1 return must match with the books, and the input tax credits that are availed by the taxpayer and the corresponding input tax credit balances as appearing in the credit ledger must match with the books. Then use tech tools and document everything. So many third-party softwares or Excel utility are available to reconcile the GST data. Such tools and softwares can be used to handle voluminous data. Then prepare for scrutiny when reconciled data. So taxpayer must keep the data reconciled, and any notices or communication from the GST department should be communicated or replied to along with the reconciled data. So that's it for this module and for this session. Thank you.